Hello, everybody, and welcome to the Friday edition of Trade the Chain. I'm joined along with Trade the Chain's Director of Research, Nick Mancini, as well as Doug, the Everyday Guy, DeRosa. And so happy it's Friday, getting ready for the long weekend for people in the U.S. who celebrate that sort of thing. Otherwise, everybody else around the world, it's just a regular weekend. Today is, we're going to be very timely with our discussion today. For the people in the U.S. going into the long weekend, there's always that traditional low volume. Where's the market going? What am I looking at? Are we going to tank? Is Asia going to mess us up? Is Europe going to make us, pump? Blah blah blah. So we're going to discuss that because we don't want anybody to go into the weekend scared. That's for sure. The first thing we're going to do is go into the macro cycle. So here we go. Today we're still under $1 trillion. $1 trillion is that magical market cap number. It was just a half a year ago where it was 3 trillion, and never thought I'd see it here. Kind of like those people who scream, "This is the last time you'll be able to buy Bitcoin for under 20K." Well, here's a shocker, folks. Today you can buy it again for under 20K. So go enjoy. Bitcoin sitting in at 19,895 with a 54 out of 100 neutral sentiment. If you saw the tweet this morning from the Trade the Chain account, they went over the hottest on Twitter. We'll go down to the most bullish coins on this Friday afternoon EST time. EGLD with a score of 91. I see a lot of folks on Twitter who are big EGLD fans. So there you go, top in the list. HBAR with 90, Chainlink with 84. Divi with 81. Haven't seen Divi up here. Those folks on the team are neighborhood pals of mine, if you so to speak. Going to the bearish coins, we got XDC with a very, very low score of 10. BFI 19. Rounding out that list is KNC, which is Kyber Networks, at a score of 30. And if you are a fan or peruse Twitter and see our spaces, which are every Thursday at 4:30 Eastern time in the afternoon, Nick, am I mistaken? Don't we have Kyber Networks on next Thursday on our Twitter spaces?
Yes, this coming Thursday, so 6 days from now.
Awesome. And always excited. KNC has always been a token that's been in my playbook, my portfolio for the last handful of years. So excited to have them on Thursday's show to chat all thing KNC with them. As you can see, we're right now for the 1 hour about steady. But folks, let me tell you something. If you've seen the price action over the last hour and a half, you would have noticed a big wall of red as we just dropped from the sky on Bitcoin pricing and just hammered right through that 20,000 mark. And with that, I'm not going to say any more. I'm going to go to our in-house expert, Nick Mancini, and let him hit the charts and explain what is happening right now and what we can expect over the weekend.
Yes, sir. Well, we are looking at our faithful weather vane S&P futures. And when we spoke yesterday, it was what we were down here, right? We were actually on the uptrend. So we mentioned, I think we were right around here. We mentioned that this gap was probably going to get attacked. I think it was actually right around here. So we were right on the trend, the downtrend, discussing, whether it was going to survive 3,900 and the low levels, and if it did survive 3,900, what the higher levels were. We did say 4K would be a natural target if we could get above that 3,950, 3,960 level, and look exactly where that range was afterwards, 3,950, 3,960, a little bit higher. And of course, we broke higher into the morning due to the unemployment numbers that came in. So where were we at? We're at Friday, September 2nd. What happened to that's next week. That's a weird glitch. But so non-farm payrolls. So if you remember last month, they were double. So basically the Fed wants this number to decrease and unemployment to increase, which will soften demand and hopefully help abate unemployment. Last month, it skyrocketed in the wrong direction. If you're looking at it from the Fed's point of view, this month it actually moved in the right direction because our estimate was 318K and we got 315K, and unemployment actually rose. So this is the bad news is good news portion of the market cycle. Now, of course, after that happened, we had a fantastic rise. I think a lot of people became bullish. And then we received news that I think, well, to give some preface, there's been jockeying back and forth between Europe and the US, the West, and Russia in relation to oil. EU and US want to put price caps on Russian gas. And Russia basically looked them dead in the eye and said, you do that, you're not going to get any Russian gas. So, you can put price caps on, but it won't matter because there won't be a price to pay it pretty much. So that was the first kind of, strike on the calendar. And then the second one was the fact that Russia basically, and, very similar to our theory around the ship scandal, Russia basically was like, oh, we were doing maintenance today and there happens to be a leak in the Gazprom pipe. And the Gazprom pipe is the main one that shoves it to Europe. So basically, the way that it's going to work now is that oil cannot go directly from Russia to Europe, whether or not, the issue is real or fake. Oil is not going from point A to point B in the most, in the best way, the cheapest way. It's now going to go to China and then be resold into Europe via third-party shipping routes, which is going to continue to increase the price, and is basically Russia's workaround to say, screw you, you're still going to get our oil, you're just going to get at a higher price, and we're going to do it a completely different way. So basically, that entire story took us down that's the wrong one. Took us down, I want to say 2-3%. Yeah, about 2% on the S&P. So when that happened, of course, we had a massive drop in Bitcoin, which has now recovered. This actually might be a decent short opportunity, depending on if it survives. Bitcoin tanked, and then Ethereum also tanked. The issue right now is if these 4-hour candles close engulfing, then there's a much stronger bear case to be had. Potential bearish divergence forming on the chart as well. So right now, we were looking very bullish. My prediction was if we could close above this moving average on the 4-hour for Ethereum, then we would likely continue higher. Gas news rocked us lower. So now we pretty much have to, if this candle does not survive, and if this candle is not bearish engulfing, meaning it doesn't close above 1590, then we'll probably likely continue down to that next moving average, which is about 1550. For Bitcoin, if we close, bearish engulfing, then, I would say that we're back down to the bottom of the channel at least. And if we do close above the previous candle body, which is that POC right there, which is about 20.1, then, 20.1 or higher, we can continue higher. 20.1 or lower, there's a better case for continuing lower. So going into the weekend, we mentioned many times that we were expecting some sort of swing up and down to kind of print a monthly high and then continue into the lows. That still seems likely at this point in time. I mean, that could be our rise and our fall just because of the timing of the gas situation. But we'll have to see. Europe is already making statements about how they're going to manage the energy crisis and things like that, obviously trying to manage the market situation heading into a long weekend for the US market. So it's going to be a very interesting weekend. I thought we would have a much more clean outlook, rock up here, maybe get 21.5, and then we start, then fund managers come back and just hit the sell button. But it's much less clear now. So basically, if you're trading this weekend, I would not set any swings unless you are unless you have very high conviction to the downside. And I would look for range plays. I would not play the center of the range, although this is right around the area where you would hope to catch a long back up to the top of the channel and continuation. But looking at this, it's not inspiring at all. And I'm for the first time in a long time, I'm truly at odds with what to do with this chart. I do still feel that we're going to have a bearish September, and likely when everyone comes back for Labor Day, they're going to have, conviction to the downside. But we've had multiple instances this week alone of bullish momentum being completely slapped back by erroneous macro situations, i.e., gas now, shipped before, Fed numbers, FOMC, and stuff like that. And so in 2 weeks I think we have CPI, and then in 3 weeks we have FOMC. So September is going to be a heck of a month, and it's clearly starting out that way already. So
interesting stuff. I mean, listen, we already said yesterday, we mentioned everybody on September 1st that for the last 5 years in a row, we've had a red September when it comes to crypto. I think the majority of us on this screen, I don't want to talk to anybody, but part of our market bottom as far as Bitcoin is concerned is projecting in the September range. I know mine starts about the end of September and goes through October. We also have the FOMC, as you clearly stated, Nick, coming back. How bloody, if you had to guess a range, listen, there's always two sides to every scenario, right? The upside, let's say BTC can go up to X, downside this. In your gut of guts, if we go through a downside, where do you think at this point the bottom would probably range at?
So what I have right now is the monthly chart. Look at that. I mean, there's a POC at 140. Look how much liquidity is underneath. This is big. Oh, this is Ethereum. I'm sorry. Look how much liquidity is underneath $500 compared to everything else, which is just fascinating. But so downside, the easiest way to do it is for something like this. I mean, and you can see why we found that bottom when we did, right? Top of the previous high, that multi-month, range, flat candles, slice through that, and then, just swing failure tweezers underneath the moving average and caught, pretty much near exact, levels of those candle body closes. So downside, you would expect, the first goal would definitely be, first goal would be down here. And then you would probably see some consolidation. And this is the monthly chart, so it's going to go out in like February, April. That's not what I'm saying. I'm just kind of giving direct, general motion.
Sure.
Then you would expect consolidation here, and then potentially down into, tag. See this equal candle body right here from April and May of 18. That would probably be the next support area that I would say is extremely strong. And it kind of coincides with the top of this candle body from November 20. So I would expect that. And then, I mean, this would be probably the low, in that scenario, because now we're dipping into, 2023. But in the worst case scenario, this is probably the strongest support on the chart. And that's why you're seeing also that heavy liquidity level right here. You can see that kind of poking out before these really low numbers. And so, this would probably be the lowest low I would probably expect for Ethereum. Is what number is that? 400. That would be the lowest low. So first step would be if we were to completely break down, if we were to break underneath this entire candle the previous month. So the low is 1400. Then we would probably careen down to, 1100, 1K. Of course, big psychological number, and then you would expect some consolidation if it doesn't slice right through. And then the next target would be, around $700, and then, very similar pattern to that. So, this may induce a bear market rally. This may induce a bear market rally. This may induce a bear market rally as well. And then you would hope to see some flattening, potentially between, 5 to 7 if it gets down there, or you would hope to see flattening between 7 and 1K if it gets down there as well.
Man, imagine I'd take any of that all day long.
Oh no, that's what I wouldn't even care really what the macro situation's looking like. If ETH is $500, I'm buying.
Oh, 100%. I'm selling the kids and throwing everything into it. My bags will be heavy.
I'm moving into your guest bedroom and saving all rent.
I was just gonna say that about you. Come on. Now, Doug, for the everyday guy, we have mortgage interest rates to talk about. We have jobs to talk about. We have how far your dollar's gonna go. I mean, there's a lot of people that are clearly not seeing a short end in sight for what's going on the macro level. What are you seeing, going into this beautiful sunny Labor Day?
Well, like you said at the top, and just then it's Labor Day, right? Which is the unofficial end of summer. So now we head into the home stretch of the year, the last 4 months. So the big question is, where are we going with all this? Like you said, the 10-year was in the 250s a month ago, hit 325 the other day. That has made 30-year mortgages go from 5.5 to 638 today, which is insane. So where are we heading in the last 4 months with mortgages, right? Are we going to hit a 7 handle? That's really, again, the Fed wants pain, right? We've discussed this many times. That's what Powell wants. 7% mortgages, no one's buying a house. No one could afford a house at a 7% mortgage, not with these elevated prices, right? So what does that do for that? We've seen numerous friends and colleagues on LinkedIn saying they've suffered job losses recently, right? What is going to happen in the next 4 months? What companies next are going to announce some job losses, right? There's been some big names. Do we have any friends and colleagues further that we know that will lose their jobs, right? So that's something to look out for. You look at just even the tape action, and Nick could add to this, just in equities today, right? We were up 200 or so, I think, early in this morning, and then all of a sudden we reversed almost 550 points in the top. And again, the Gazprom news certainly was part of that. But then also, are people saying, hey, again, people sell in May, go away, come back in September. Let's get ahead of this now, right? Like what's good for the markets is not going to be good for people and vice versa. And now is the pain actually going to start happening here, right? And how bad is that pain going to be? So I think that markets are just like people. They don't like uncertainty. And there's just so much uncertainty now. Like, where are we heading with this stuff, right? And so I think it's precarious times. We'll see where oil goes. That's been in the mid 80s. Is that going to go back above 100 if there are some geopolitical concerns? Or is that going to dump down to the 60s where demand gets destroyed further? So too many open questions. We also have Celsius and Voyager in our space, right? That they're going to have news, obviously, in the next 4 months. There's going to have resolution, we would hope, right? So a lot of things to really happen in this last, I wouldn't call it quarter. The home stretch of the year is going to be fascinating. So as one person I know says, hang on to your handlebars.
And you pay a lot of attention to housing and what's going in the markets now. One of the things that's interesting is we still haven't hit that intersect where we now have mortgages that are skyrocketing, but we haven't hit really that intersect where house downward price action, or rebates off of houses, people slashing prices, has not really hit velocity yet.
Well, it's a market, right? No different than a stock economy or a crypto economy, right? Where sellers have to come down and then other sellers see that and then it starts to cascade, right? So there's going to be forced sellers in real estate. People always have to buy and sell because you lose your job or your kids have to move, whatever it is. So we're not, like you said, people are kind of hanging on these legacy prices from 6 months ago, thinking they could still get that. But at some point, it's the rude awakening, right? And again, if you see 7% mortgages, people are going to say, look, I'd love to buy your house, but you're going to need to drop it $100,000, and if you have to sell, you have to sell. So that hasn't happened yet, but it will at some point. So, and again, that's the last domino really to fall in this chain where we've had equities, crypto, bonds, and then really real estate is the last of the four bubbles to pop. So.
Yeah. Just to give everybody perspective of how important the interest rate is on a mortgage, we're up at that 6 level right now, and that's a very high mortgage in recent times, and it's only looking to go a little higher. If you have a $500,000 house, for example, I'll give you a rough estimate. The difference between going from a 4.5% mortgage to a 6.5% mortgage is about the monthly payment of a fully loaded, mid-sized car. You're looking at about $500 a month alone in a larger interest payment. So it's a big deal.
And why we talk about this just for our viewers is that, again, what does this have to do with crypto? Like, if you feel good about where you're at in life, you feel good about your wealth, your job, you're going to buy some things that are higher on the risk spectrum, right? Which is crypto. But if you don't feel good about your job, you don't feel good about your house, you're really struggling, you're really not going to put that much money in this space or any of the risk assets, right? So it looks like Alex froze up now.
Uh-oh. that Puerto Rican Wi-Fi. Yeah, no, I will just to pick it up where that left off. I mean, it just comes down to basic supply and demand. I mean, I mean, the way that I always boil it down to just the simple ones and twos is just, if we're heading into a recession, people typically need a little bit more dry powder, or they get into a crunch. They have to put the supply on the market. If demand is softening and there's more supply, price goes down until that equals out, and then things move higher. I've seen a lot of people that I've talked to, like, they're like, oh, I had 30 houses on the market last month, now it's 60, and it's just been every month I'm hearing more and more about that, which is unfortunate. But if you didn't buy, it's two sides of the coins. If you didn't buy during the bull run because you were like, prices will soften, then maybe you're getting it. Maybe your patience is going to pay off. But if you did buy, if you were overzealous, or you were one of those, TikTok investors that took out a mortgage, or refinanced your mortgage on every single house and then reinvested that money into down properties and things like that, then maybe you're not doing so hot. So
for sure, yeah. For our viewers, Nick,
I would assume it's going to come off soon too. I mean, I would expect rent to soften in the next year as well. It's been freaking crazy.
For sure, yeah. As we're waiting for Alex to jump back on, hopefully. How are you preparing for the last quarter in terms of the last 4 months for your trading? Are you taking any core positions? I know that we're obviously macro bears here and seeing hopefully a flush out, but are you holding on to anything that you like specifically and then just trading around those? Or are you just basically just trying to stay nimble, as liquid as possible, and just really just look for shorting opportunities for the most part?
Yeah, my goal was actually to enter a swing short on these highs for the month of September, and I'm clearly not going to get the best price on that, unfortunately. But for prepping for Q4, it's just the core things I'm looking out for are what's going on with the gas situation, because we've been discussing in the community about Biden. Has been releasing reserves. Eventually, that's going to have to stop. You can't let the reserves go to zero. And obviously this European energy crisis. So I have a feeling that oil is going to be wonky, but eventually we'll have a much better picture on that being alleviated, I think, after the winter. I really hope this isn't a multi-year thing. Like, I really hope, Ukraine and Russia can reach some sort of resolve. But that's an indefinite. So that's kind of one of the big triggers that I'm looking for. And then also looking for, sideline capital. So, less USDT and USDC dominance. So I'll be tracking those into Q4 to just kind of like we track DXY. So DXY is an imperfect asset to trade, but it's a good benchmark because it's inverse typically risk assets. And so USDT and USDC dominance are inverse large cap risk assets in crypto as well. So Bitcoin, you can pretty much chart Bitcoin and Ethereum by charting the inverse of the dominance levels of stablecoins. So that's something that I'll be looking at as well. And then, of course, these key levels. So if we start hitting key levels on the chart, that may induce at least a bear market rally, or, start to give thought to, a true bottom. We'll be looking for that as well. But mainly I'll be looking for downside price action for Bitcoin and Ethereum, at least into October. And then we'll probably have to reassess because it's too big of a picture. We're too low and it's too broad. It's too opaque of a macro picture to really start placing that long of bets. I think the long-term bet was best placed in October, November, December of this previous year, potentially January as well. So the best is probably just to wait it out. If you're in cash, stay in cash, take your trades, and then, look for some of the key triggers in the macro cycle, such as, the gas situation is one, inflation actually topping, unemployment rising a little bit. If things start getting pushed in the Fed's direction of what they want to see, the market will find some reprieve from that as well. So,
for sure. Awesome. Well, I guess that's it for the weekend then. I guess Alex is not coming back. So
yeah, no, he just messaged us that his internet completely went out. So we're gonna figure out how to close this.
Yeah, I think we just leave the studio. Well, thank you, everyone. Thanks for tuning in. Obviously, enjoy the long weekend. We'll be back on Tuesday.
Apologies for the technical difficulties. I'll have a show on Monday because futures will open Sunday still. They might actually open Monday, but they'll open a day before the markets open at least, and I think maybe 2. So I'll still do a show on Monday because crypto will obviously still be ripping, and futures will give us a good indication of how the week may open. But we will definitely not have this show. And you'll definitely receive a newsletter Monday or Tuesday. It might be Tuesday just because it might be better for everybody to not be reading markets newsletters on Labor Day, but we may send it anyway just because it'll be relevant. But also tomorrow or next week is going to be a bit of a quiet week in terms of economic data. I think we have PMI. That's it on Tuesday.
But we have the Ethereum merge. Ethereum merge next week, right?
Oh, the Ethereum merge. Yeah, well, that's 2 weeks. That's not next week.
Okay. I thought it was the 6th, though. Didn't they move up the date to the 6th?
Oh, I thought it was mid-September. Ooh.
Okay.
We'll double check that. We'll put that in the trade the chain community because we'll definitely have some analysis leading up to the Ethereum merge. Although, like we said before, it's still clearly at the mercy of the macro, considering how hard it dropped on the Gazprom news. So, merge or not, it is not immune. So we'll definitely be covering that very soon.
Cool. Enjoy the weekend, everyone.
Cool. Goodbye. Have a good weekend.